Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Chris Dearborn. He's the managing director of Nasdaq's Markets Intelligence Desk. And welcome to my favorite hit of the week. It's just after 2 o'clock. It's Friday. You're on with me. We know it's cruising into the weekend. The story of the day was the strength in the labor market. Besides the fact we saw a little sell-off, but we'll get into that. Pretty good numbers coming.
Non-farm payroll was great. The numbers were spectacular, actually. And really validates what we've been saying, that low unemployment has really been here. It's been here for a number of years. The non-farm payroll number coming in at 201 jobs was fantastic. But there's a lot of meat in that number, right? You're seeing wage increases, not only year over year up 0.2, higher than expected, but also month over month was higher. Right. So what you're seeing finally is that you have wage growth pairing with low unemployment, with job growth, meaning that people are actually starting to get paid for the job that they're doing, and that's going to be a boon for the economy. It validates some of the Q2 numbers on GDP that we saw the week before, and it kind of bodes well for us going into the end of Q3, and more importantly, the Q4 consumer season, which is the all-important, especially for the retail names, their number, which will validate GDP number, because GDP is 2/3 consumer spend. And so if you have more money in the people's pocket, people are back to work, and more people are spending that money, it's going to be a full cycle and will come back to help this economy.
Yeah, expectations are quite high going into holiday 2018. So
very much so.
But the fact that we're actually getting wage growth, that's key, because that's been stagnant for a few cycles here. And of course, we saw the reaction in the commodity and in the dollar as well. Dollar up, commodities down.
Yep, the dollar's trading. We made a 52-week high last week. Touching almost 97, 96.5 in the DXY, and with that, it's kind of sold off as the equities rallied. You've seen. I wouldn't call it that they've come back into line, the commodities and the bonds with the equities, but it's starting to get a little bit more normalized at times. But then you have something that happens, trade talks and everything else, and just throws everything out of whack again.
I know. I love it when I see trade talks trending on Twitter. I'm always like, come on, let's be my show for once. Speaking of that, it looks like the major averages are going to close lower for the week. But again, the sensitivity that the broader market has towards tariff headlines is quite impressive. I got to MarketSite today at 12:09, turned on the CNBC in the back, 12:10. Dow shoots 130 points, and it's all because of Trump talking about tariffs on his way to the Dakotas.
Yeah, you wish U.S. one had taken off a few minutes later, right? And you would. So, again, it's a very sensitive market, hyper sensitive, and they're going to react to anything macro that could be imposed negatively. The market's open in the red a little bit today. The Nasdaq composite, the Russell, the S&P all down. The Dow not so much, but again, the Dow's a different type of index as opposed to the broader base. But again, we're coming off of, for the Nasdaq 100, the Nasdaq composite, the Russell 2000, the S&P 500, all-time highs last week. So we're still right there.
Every day we kept hitting on the comp.
Yep, every day, and you're still there. So taking a little bit of a breather as traders come back to work following a shortened week with Labor Day on Monday, I'm not overly concerned. We've only had in the past month 3 trading days where the consolidated tape did over 7 billion shares. So the average for the year is 6.9 billion. 7 billion is right in the wheelhouse. We haven't even come close to that for the entire month. So let's get a little volatility and a little movement back into the markets and see where the dust settles. You're still trading at all-time highs. The commodity situation, yes, oil ran up. There was fear of the hurricane coming through the Gulf, right? And that's sent the WTI up, crossing over $70, and it's retraced to where it was at the beginning of the month of August. So is 66, 67 a good number? I'm still paying $2.89 a gallon at the pump on Long Island. So, I really don't see that flowing through to me or anybody else.
It's really interesting. You were just saying, look, we're at all-time highs virtually every day last week, and then, of course, you're going to get the headlines when you see a precipitous drop like we saw this afternoon. But fundamentally, what's changed? From 12:09 to 12:10, what fundamentally changed?
Nope. You're taking a little bit of profits, and one person takes the profits, a couple other people do. Look at Amazon. It touched the $1 trillion mark on Tuesday, right? People were pushing for that, and it's since fallen back a little bit. Doesn't mean it's not going to get there again. Of course it will. But what you're seeing there is people have that herd mentality, which can hurt markets. It can melt up, but it can also sell off as well. And if everyone's on the same side of the trade, that trade's going to be crowded, and the moves are going to be overextended in a shortened period of time before normalizing back to the trend that they were in.
I would also argue that 12:09 to 12:10, that minute, that's a machine. That is now all of a sudden people fundamentally changing their mind and hitting the sell button.
Correct.
So
I wouldn't be surprised if you see some E-mini contracts trading off and the roll-off coming there from the equities.
All right, so let's take a look at the trading week ahead. Actually, no, I want to touch on Asian markets because
Sure.
that's of course, that's going to be the elephant in the room, considering that's where the
Right.
tariffs are being targeted.
Absolutely. You mean one quick comment saying, I've got over $260 billion more in tariffs ready to go when I want them. The $200 million that he promised, they've just finished going from comment from the public. It's one thing onto the next. If you talk about trade, and I'll shift back to the Americas on this, and we'll go to China. But Mexico's come to the table, right? And look at the market rally into that. Negotiations have gotten much more serious with Canada. They weren't serious before, but they're getting closer to an inflection point. And if that comes to fruition on a deal, then you'll see the markets rally on that as well. So he's doing things step by step, using Twitter and the rhetoric to shake fear, which investors don't like fear, and they don't like uncertainty. And once that deal is done, then those markets will start to rally. Will we see another $267 billion in tariffs imposed? Possibly. What do we import? Almost $500+ billion last year. So where are we going to go with this? China can't retaliate. The only way they can retaliate is with their currency. And if they do that, then you're going to have a problem with the markets. You're going to see the 10-year pop. You're going to see the dollar spike, and you're going to see markets roll.
I think it's going to be interesting going through the back half of September and October, not just because of the seasonality of those 2 months, but also going into the midterm elections. The market, the economy is going to be brought up consistently. So for traders looking for that volatility, who knows?
You're less than 8 weeks away from the midterm elections. And there's a lot of headway given to polarizing more of this political party that we have here in the U.S. And what's going to get headlines? Trump is getting headlines. He always has been. It's always been all eyes on me. And if that helps his party into the elections, then it'll be more of the same and the economy will continue to go up. If those elections turn the other way, and it goes more to the Democratic side, then that could be uncertainty going forward into the markets. So what would it be? If he gets the tariffs in place and if that money comes through, we could have some issues.
Fundamentally, though, it hasn't changed
but nothing's changed.
companies.
Again, it's could. Companies are still marching along. We just finished Q2 earnings season. Earnings rates are over 25%.
Yeah.
So the companies are doing well. It's just not the headlines that you see on the macro side, but then the macro numbers, looking at non-farm payroll, looking at ADP, looking at unemployment numbers. Next week we've got Beige Book. Next week we've got PPI. We've got retail sales. We've got consumer credit. Those are all true numbers that you can't really come up with. You can't fake that.
Right.
And if they're strong, then the economy is strong, and that's going to be reflected in the stock market.
Right. And if we take a look at the trading week ahead, it is relatively quiet, with the exception of the big data points that you had mentioned before. Just a handful of earnings. We have Adobe, we have Oracle. So not much on the tape in those regards. A couple conferences out there. Sometimes you get some good headlines, but you know what? Even in a boring calendar, it's never a dull moment.
It's going to be right. Any headlines out of the conferences, there are plenty of conferences this week as well that captured headlines that move single stocks on all different fronts. And we have the same potential for next week. And there's going to be some large conferences with a lot of participants, and you're going to see those headlines come through. People want to make announcements. If you're a sell-side brokerage firm and you have buy-side investors coming to these meetings, companies want to make an announcement. So they save them up for these type of events.
Right. We have the technology conference, and you also have Mobile World Congress.
Yeah, I mean,
and that's going to be
big. It's big.
A big thing.
Right. So there could be a lot of headlines, and don't discount the tweets out of the White House. Right. They're always there for you.
All right. Well, thank you very much, as always, for joining me on a Friday. And thank you for joining me. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.